The official numbers for retirees on tax changes came out today. And the interesting thing was a lot of the projections that they gave were actually 100% accurate. Here are some differences between 2024 to 2025. Your smallest bracket went from $11,600 to $11,925, additional $325. They were feeling really generous. And they went from $11,600 to $47,150 to $11,900 and $48,475. So you're going to start to see more of an increase and then being a bit more generous when you're in the 12% bracket. 22 is $47,000 to $100,000. That goes to $48,000 to $103,000 a year. At $100,000 at the 24% bracket, it's going to go from $100,000 to $191,000, now to $103,000 to $197,000. And hopefully, with the magic of the internet, I don't have to read every one of these numbers. You can see the changes. This is the 32% bracket. This is the 35% bracket. There's an increase. And you can see again the 37% bracket. They were the most generous, obviously, because of the changes of the ratios, right? And this is your married brackets. 10% went from 0 to 23,200 to 0 to 23,850. Not much of a difference. 12% went from 23,200 to, the comma is wrong, it should be 94,300. The 23,841 to now 95,950. So there's a difference of roughly 1,500. Then you go from 94,301 to 201,000. This is the 22% bracket. That's going to go from 96,000 to 206,000. And again, I'm not going to keep reading every one of these numbers. I'm just going to highlight the 24% and the changes. The changes on this side, 32% bracket. Changes again. The changes over here, right? A bit more of a difference, 35%. Again, because the ratios are changing, they're giving more leeway from 487 to 731 to 500,000 to 751. So for higher earners, there's obviously a bigger savings. But the standard deduction has changed as well. So instead of it being $29,200, it's now going to be $30,000. And if you're single, it's going to go from $14,600 to $15,000, okay? So that's single and married. I should have differentiated that, but yes, single, as you know, is $14,600. It's gonna be $15,000. They're gonna use flat numbers. In 2026, the brackets are also gonna change. The 10% bracket is not moving. The 12% bracket is gonna go to 15%. The 22% bracket is going to 25%. The 24% bracket is going to 28%. The 32% bracket is just, it's going to be changed where instead of having it from a 24 to a 32, there's going to be a 33% bracket, a 35% bracket. So this doesn't apply in the same linear fashion. It's going to have a different ratio. And the highest rate is now going to be 39.6. So the rates of taxes are going to go up. That's why there was a 46% Roth conversion last year, massive Roth conversion. Also, your standard deduction is going to be dropped significantly. This is why it's important for you. Now, I'm an enrolled agent by the IRS. It's the highest credentials the IRS gives on taxes. It's very important for you to see in the future how you can itemize your taxes, if at all possible, because the standard deduction is dropping. And a lot of people use the standard deduction because it has been relatively high. But it's going to go from $30,000 to $15,000 if you're married. And if you're single, it's going to go from $15,000 to $7,500, which means that you have to start learning how to itemize if you can. So please work with your accountant and see if you can get help with learning how to maximize your deductions on the top line of your revenue. And that's the best way to do it, is to figure out how to maximize your top line deductions, because all further deductions in many ways are just incremental unless you know some really good strategies to help you with taxes. There are some pretty good strategies already, like, for example, don't give money directly to a charity. Use a qualified charitable donation. This way money can go from a qualified fund directly to the charity. That also helps lower your RMDs. You can also use certain types of trusts that help you lower your taxes. But the biggest thing you can do, and it's pretty much applicable for everyone, is learning how to use the most amount of money you possibly can for your standard deductions. Because when your standard deductions drop, that means your brackets that you're going to hit into, they're going to trigger. And for a lot of people that are lower income, it's going to be very, very difficult for them. So we better keep our fingers crossed. And if you need any help at all with your taxes, let me know. We help retirees retire smarter. And we have great videos on how to do Roth conversions and things like that. So watch our other videos, and thanks for watching this one.